Hello there. Welcome back to grade 11 accounting. In this video, I want to look at the question on VAT and individual systems, whereby our question has got 30 marks and requires you to spend on average 24 minutes on this question. So on our question, it's on Karma stores, and it reads that you are provided with the extracts from the books of Karma stores, a registered VAT vendor. Goods are subjected to a VAT at a rate of 15%. So on the required part, first part, we've got 3.1.1, which says state whether the following statement is true or false. Explain the reason for your answer. Very important to take note of the second part of the question is saying state the reason for your answer. So after identifying true or false, we need to state the reason why you've chosen that response. So we've got our next part, all goods are charged VAT at 15% in South Africa. So question has got 4 marks. So obviously there are 2 points that needs to be raised there. So let's just try to see in terms of why we have got the question is saying state whether the following statement is true or false. Uh, the statement is saying all goods are charged VAT at 50% on South Africa, which means all goods in South Africa are being charged at 15%, which is not true. Remember, we have got some goods that are zero rated. We also have some goods that are VAT exempt, which are not even supposed to be charged VAT. So those are the reasons that we are going to state. So we are going to our 3 points. Let's go to our answer section and respond to 3.1.1, whereby we are saying 3.1.1, our answer is false. And the reason why we are saying it's false is because some other goods, are 0% rated. Which means the VAT is 0%, but might be increased. So what we are saying is this VAT of 0% can be increased at a later stage. So that is the first point. The other point is we can raise the issue of having VAT exempt goods. And another point is that other goods are VAT exempt, which means no VAT is charged on those goods. Which means no VAT is charged on those goods. So this is what we intended with the response of the first part, which is 3.1.1. And we can go and try to see on the second part of the question, which says, calculate the amount A to D in the table given below. So we're given a table that we're given there. So we need to calculate the figures that were given A, B, C, and D. But then we are given excluding VAT. Remember the proportion that we have when it's excluding VAT, it's always 100%. So it means here we've got 100%. And including VAT is going to be the excluding plus VAT will give you the including. So we have, remember our rate is 15%, here VAT is 15%. So including VAT is 100 plus 15, then we get 115%. So these are the proportionate representation that we have there. So we are just going to use simple proportion there, whereby we are, for A, we are going to say 150% is equal to 730,000. What about 100%? Then we just make a proportion there. So let's just try to see how we can represent it so that we can be able to make a proportionate calculation. So in this case, 150% is equal to 736,000. So we are going to say 100 and 15% is equal to 736,000. So the figure that we are looking for our A, the figure that we are looking for is excluding VAT, which is your 100%. So you can just make that proportion whereby saying 100% now is the question mark, the figure that we're going to look for. So having that now, we are going to say what we don't have, it's 100%, we make it the numerator. And what we have is 150% to make it the denominator. We multiply by the given figure, which is 336,000. As simple as that. Then we do calculate that one. You see that the answer that we are going to get is 640,000. So this is going to be your A. So your A is 640,000. So this is what we have in terms of A. Then we try to move on to B and see how can we find our B. So our B is now VAT. So we now have VAT inclusive here and VAT exclusive here. So to get VAT, we are going to say VAT inclusive minus VAT exclusive. We can also get it, or we can use proportion. And then in this case, our B, we are saying it's equal to 736,000 minus 640,000, representing your VAT exclusive. Then you get your answer, which is supposed to be 96,000. So this is our B. Then we go to our C. Our C now, we are on the second part whereby we are given 100% is our VAT exclusive 4,600. And the figure that we want is 115%. We make a simple proportion. 100% is equals to 4,600. So we are saying 100% goes to 4,600. What about 115%? So what we don't have is 115, becomes the numerator. What we have 100% denominator, multiplied by the given figure 4,600. So we do this calculation. We are going to get your 5,290. So this becomes your C. So we go to the next one, which is obviously our D. So our D, which is the last one, gives us the last part where we have in our VAT, we're given the VAT exclusive value. So when I given the VAT exclusive and given the percentage, which is 15%, and you're asked to find VAT, you can simply say 15% of 890,000, whereby you're saying the rate times VAT exclusive. So basically, you're saying 15 over 100, and then you multiply by 890,000. Then you are going to get your figure for VAT exclusive. So for VAT, which is our D. So calculate like that. You see that the answer that you are going to get there is 133,500. So this becomes your D. Then obviously we want to move on to the next part of the question, which is on inventory systems. Let's just try to go there and see how to go about it. If we want to inventory systems, we have got indicate whether the following statements are true or false. Write only true or false next to the question numbers, that is 3.2.1 up to 3.2.5 in the answer book. So on the first part of the question, which is 3.2.1, reads carried on sales increases the value of trading stock when using the periodic inventory systems. So we know that the value of trading stock using periodic is determined by a physical stock count at the end of the period. So there's no way that our carriage on sales are going to increase. And also, our carriage on sales is an expense that is charged in the profit and loss account. So it's not going to affect our purchases. It's not going to affect the figure for purchases, or it's not going to affect the figure for our closing inventory. So we are not going to have any effect there. So it means our statement is false. So we're going to indicate it as false here on the first part. The second part, one advantage of the perpetual inventory system is that stock theft is easily detected, which is true. Remember, perpetual inventory system is a valuation of inventory is continuous. Every time we receive new stock, we are going to calculate the new valuation of stock at that point in time. So you're saying we are going to see that we can easily detect from time to time that there's something that happened in terms of stock. If there's theft that happens, we can easily detect it. So here the answer that we are going for is true. Then we go 3.2.3, which says cost of sales is calculated at the end of a certain period in the perpetual inventory system, which is false. Remember, perpetual is not at the end of a certain period, but it's a continuous thing that happens from time to time. So it's going to happen on many occasions before the end of the period, which is false. 3.2.3 is false there. Then you go to 3.2.4. The periodic inventory system is mainly used when large volumes of high-cost items are sold. So you'd see that this is false. This is false. So we can indicate there on 3.2.4 that it is false. Remember, we can never have a scenario whereby periodic inventory system is used when large volumes of high cost items are sold. This is applicable to perpetual inventory system. So we go to the last one, which is 3.2.5, which says perpetual inventory system is costly to administer, which is true because the valuation is done from time to time. The issue that we are having it being done from time to time, obviously, we are going to incur more costs there. So this is what we have now. We have true there. So this is what we have. The question, this part of the question is got 5 marks. So we can move on to the next part to see what we have. So we are now on 3.3, which reads S. Smith, and 3.3 reads that the information provided below relates to a business run by S. Smith, which sells school sunhats. The business uses the periodic inventory system. The financial year ends on 30 September 2022. And on the required part, calculate the cost of sales for the year ended 30 September 2022. Show all your calculations. Then second part, calculate the average rate of stock turnover for 2022. So on the first part there, many marks are there. We are seeing that we've got 12 marks that are there. So it means we've got a bit of calculations that we need to do there. So 3.3.1 is calculation of cost of sales. So we have got a statement that we need to fill in so that we can be able to calculate cost of sales. So here we can just say calculation of cost of sales. So on calculation of cost of sales, now we are saying we are going to use the formula. Remember, we say our opening stock. We are going to add our purchases, and then we are supposed to, if there are carriages that are there, we're supposed to add them, and then obviously we subtract our closing stock to get our cost of sales. So the formula that we are going to employ, remember, we say cost of sales is equals to our opening stock plus our purchases. If there are returns there, subtract your purchase returns, you add your carriage inwards if they are there, which are the carried on purchases. And then I'll add our custom duties if they are there, and we subtract our closing stocks. So depending on the elements that we are given there, those are the ones that we're just going to include. So we come here, we are going to say, the first thing that we're going to put is opening stock. So we're going to say opening stock. And then we try to find out which figure for opening stock are we given. So we've got an opening stock of 34. We are seeing it as 34,000. So we can just put our 34,000 as our opening stock. And then after opening stock, we need to add our purchases here. And then we try to see which figure for purchases are we given in the question. So we can see that we do not have a figure that we are given there for our purchases. So in such a case, what we are supposed to do, we are supposed to calculate the figure for purchases. So basically, what we are going to do there, we are just going to use the criteria or formula for our creditors control. Remember the purchase figure, we get it in the creditors control account. But basically, I'll just give you a breakdown in terms of how are you supposed to present it in a creditors control account. So let's just say this is our creditors control. Creditors control, that's where I find figure for purchases. Remember the opening balance of creditors will be on the credit side, the closing balance will be on the credit side. And then what was paid during the year for creditors comes as bank on the debit side, and the figure for purchases will come on the credit side. So that's the figure that we are looking for. So to get the figure, it means we're going to just say opening balance. Sorry, we're just going to say your bank, the amount that has been paid, plus your closing balance, then you less your opening balance. Then you get the figure for your purchases. So this is exactly the formula that we are going to use. So you can just try by looking for the figure for bank that we have. For the figure for bank that we have, it's creditors were paid 424,570 during the day. So this is the figure that was paid, which is the bank figure that we are looking for. So we've got 424,570 is our first figure. We have 424, sorry, 424. 424,570. So if you go back to our formula, remember we've got a formula that we are following. Here we are saying our bank, then we add the closing balance. We add the closing balance that we have there. The closing balance is this one, 96,000 of creditors. Remember, this is 1 October 2021, so this one our opening balance. Then closing balance 30 September 2022 now. So this one is our closing balance. So we add our closing balance. And then our opening balance, we are supposed to subtract it. So plus 96,000 minus 103,000. Plus 96,000 minus 103,000. And remember, if there are any returns, we are supposed to subtract them. So we can check in the return information if you have got any other returns. We don't have returns there. But here, if you come to E, they're saying old stock to the value of 4,000 was donated to a local orphanage. So which means it's reducing the value that we have for our purchases because these were donated. So we're going to say again minus 12,000. Here, subtract our 12,000. Then we get the figure for purchases, which is going let's try to see if we have any other adjustment that we need to do. Let's just cross-check for other adjustments that we need to do. If you go down, checking for any other, we have got D. We have got D. Saying 4 sunnies with a cost price of 80 rands each were damaged and returned to the supplier during the financial year. 4 sunnies with a cost price of 80 rands each were damaged and returned to the supplier. So we've got other returns that we have here, which is 80 rand times 4 sunnies, and then you're going to get your 320. So it means we are also going to subtract our 320 as our purchase return. So we come here, we subtract that one. Is going to be your 320. And then you calculate it, all those figures that are in brackets correctly, you're going to get your 405,250. And then obviously after the purchase figure, we also look for carriage figures if they are there, custom duties if they are there. So obviously, we are going to go to the additional information and try to see about those figures. So if you come to let's try to see the figure that we have for carriages there. Let's try to see. Right, we've got B. The supply charge is 500 rand per delivery. 19 separate orders were made and delivered during the year. So it means this is the figure for carriage that we are looking for. Remember, the delivery expenses or transport costs are the carriage expenses. So we're going to say, but there should be carriages for on purchases, not on sales. So we're going to say 500 times 19, and then we get the total of 9,500. So we go there and just summarize that as our carriage on purchases. Carriage on purchases 500 times 19. We are even 500, and then we multiply by 19, and then we go to our 9,500. And then obviously now we list our closing stock. So basically this is the narration of a trading account. So on our closing stock, you see that we are not given the figure for closing stock. The figure for closing stock is a question mark is here. So we get it in the transformation, obviously. If you go to the last item or at the year end, physical stock taking 275 units were on hand at an average cost of 90. So to get the figure for closing stock, we're saying 275 times 90, which is our 90 rand. And then we get your answer in rands, which is going to be 24,750 rands. So we come here. We just summarize it as it is. We are just saying in brackets, we make the calculation of 275 times 90. And then the final answer that we have is 24,750. And here, remember, we are saying less, so we subtract. So the final figure that we are going to get there, the final figure that we are going to get there becomes our cost of sales. So let's just try to see. So here, our cost of sales will come here. So basically, we are just starting from where our calculation is started by saying 34,000 plus 505,250 plus 9,500 minus 24,750. The final answer that you're supposed to get is 424,000 here. So this is the calculation that we have for our cost of sales. So if you come back to our question, we've got the last part of our question, which is saying calculate the average rate of stock turnover for 2022. So we need to put the formula down for calculating average rate of stock turnover, and it has got 5 marks. So 3.3.2, 3.3.2, average rate of stock turnover. So we calculate it as the formula that we use is cost of sales over average stock. So obviously, according to the information that we have, cost of sales, we calculated it. You can just go refer back, which is 424,000. So it's going to be our numerator. Average stock, obviously, we're going to say half, and then we add our average stock, which is opening stock plus closing stock divided by 2. Our opening stock, we're given this 34,000. 34,000 plus Our closing stock, we did calculate it here, which is our 24,750. 24,750, then we close bracket. Then we do that, we calculate it as such, you see that the final answer that we are supposed to get, final answer that you are supposed to get there. Let's try to calculate that one. Let's see what we get there. So obviously, when you calculate the average stock, we're saying 34,000 plus 24,750 divided by 2, you're going to get your 29,375. Then you calculate as our cost of sales 424,000 divided by average stock 29,375. You get your answer as 14.434 times. Remember, your answer you're supposed to leave it in times. Then you round it off to the nearest whole number here. You leave it as your, or let's try to see, as your 14 times. So this will become your final answer. So this is what we have, guys, according to the topic of VAT and inventory systems. So we will meet again in the next video. Let's subscribe and let's share the link to our colleagues who are doing the 11 accounting. As for this video, I'm signing out. We'll meet again in the next video.